Apple, the biggest U.S. company by stock market value at over $700 billion, was up over 50% in the last year, but has pulled back in the last week on differing opinions. Still, Apple is the most traded U.S. stock according to TD Ameritrade and has more than $150 billion in cash. So, should you own it, or is now the time to get out? Today we look at both sides of the argument, the bull case and the bear case, and let you make up your mind. I'm joined by Ben Gossick, Global Tech Analyst at TD Asset Management. He'll give us his 3 top points for the bulls and then the bears. Here we go. Point 1, iPhone sales rise.
So the bulls would point to that Apple has sold a lot of iPhone 6 phones. So in the December quarter, they sold 75 million units, and they followed that up with another 61 million units in the last quarter. I think what's really interesting is that only 20% of the Apple install base, so that's people that actually own an iPhone, have upgraded to the new phone. So that means a lot of the new units that are being sold are from handset switchers, and so the bulls would say there's more to this story as the existing base upgrades.
Point 2, Apple Watch tailwinds.
So Apple just launched this watch at the end of April. This is a new category for the company, and bulls have a lot of optimism on how many units the company will sell in the first year. So if this is a phenomenal launch, then we can expect a tailwind for gross margins and possibly add 5 to 10% to the company's earnings.
Point 3, valuation.
So Apple stock has had a really good run. Last year it was up 40%, and starting this year it was up another 20% going into its March quarter. What's really interesting though, it still trades at a discount to the market, and if you adjust for the company's cash, it's even cheaper.
Point 1, iPhone sales slow.
So the biggest concern that bears have with Apple is that those iPhone sales were phenomenal. So and it'll be very difficult for the company to grow in a year-over-year comparison. So if we go back to that December quarter last year, they sold 75 million units. That was a record quarter for Apple, and we did the math, and that equates to about 35,000 phones sold per hour for every day of that quarter. So just to break even, the company wants to sell another 75 million phones, and if that's not the case, we'll see deceleration, and that could be slowing sales and a negative headwind on gross margins.
Point 2, Apple Watch may not be enough.
Right, so this is a new product category for Apple. If you think about it, we've only had the iPhone since 2007 and the iPad since 2010. So if sales aren't, so it's still debatable what the sales will be. However, even if the sales are phenomenal for the watch, if that first scenario plays out, the watch will not be able to make up the difference on the company's financials.
Point 3, competition.
Right, so smartphones are still a very competitive category, and companies are always coming up with new innovations and features. One example is that Samsung has been working for the last couple of years on a smartphone that has a flexible screen. So you could literally fold it up and put it into your pocket.
So when you look at what's going on the street, what are people saying? Are there more bulls or more bears right now?
There's definitely more bulls than bears. In fact, bears are in the minority when it comes to Apple. Having said that, the stock has underperformed since they reported at the end of April. And I think it's really telling maybe the bulls are evaluating their thesis, because this was a company that delivered outstanding financial results. They increased their share buybacks, raised their dividend, and also provided inline guidance, and that wasn't enough to hold up the stock relative to the market.
So what's your opinion?
So I think we need to take a step back. Back in 2013, it was very hard to find anyone that liked Apple. The stock was down, and people had thought that they had lost their innovation. When we took a look at the company, what we liked was that it had a high free cash flow, it had a cheap valuation, and they were preparing to launch a larger handset. So fast forward to today, Apple has had an amazing run. And so when I look at a stock, what I like to do is measure the balance between risk and reward, and also look for strong catalysts. So I still think Apple is a quality company. Having said that, I do have concerns about the iPhone decelerating in the second half of the year. So we've become a little bit more cautious, and so we've trimmed our position.
So when you look out there, what is the noise that you know, the media is making, maybe others? What should investors maybe not pay attention to?
So Apple is a big brand, and so there's always a headline about Apple in the news. Just in the past year, we've seen a noise about supply chain issues. There was that whole scandal about the phone bending when people put it in their pocket.
Right.
And there's been lots of articles about, do you actually need a watch when you have a smartphone? I thought the most interesting headline that I thought was noise was about the launch date of the watch. So we're very used to seeing people line up for days whenever Apple introduces a new iPhone. And so they did something different when it came to the watch. They actually only made it available for sale online. So on the actual day that it became official that you could buy this watch, lots of news outlets sent their cameras to the stores expecting to see lots of lineups and were disappointed. And so they ran headlines that maybe the watch wasn't meeting the demands that we thought it would have. And that wasn't the case.
All right, very interesting. Thank you very much, Ben.
Great, thank you.
So there you have it, the bulls and the bear case for Apple stock with Ben Gossick of TD Asset Management. I'm Marianne Deveni. Thanks for watching.